Good day, traders. Welcome back. Today we are going to be looking at one type of an Elliott wave pattern, which is known as the zigzag, and how we can use it to take better trades. Okay, so the zigzag is a type of an Elliott wave pattern. Remember, in our last video, we discussed that there are exactly 13 patterns that we look at when we're doing the Elliott wave theory. So today we are just going to be focusing on the zigzag. Okay, so the zigzag is just the pattern, and it has that look of a zigzag like that. And since this is a corrective pattern, we label it with an A, B, and a C, or it can be a W, X, and a Y. This is just the labeling, but the pattern itself looks pretty much the same for an ABC and a WXY. The only difference being the internals of these patterns. Now, in an ABC, we call this the 5-3-5 pattern, because it's 5 waves followed by 3 waves followed by 5 waves. It's still a zigzag. Or we can have it as a WXY, which internally is composed of a 3-3-3 wave sequence. Okay, let's look at that in more detail. So we said let's first look at the ABC pattern. So with the ABC, your wave A typically consists of 5 waves, so it can subdivide into 5 waves. We call that our wave A. Then your wave B has 3 waves, 1, 2, and 3. That's wave B. And then we have wave C also with 5 waves. Okay, so first we are just going to look at the structure, then we will try and see also the Fibonacci levels, and then how we can use this to take better trades. Okay, so let's look at the W, X, and the Y, which is the 3-3-3 pattern. So these are the only 2 types of zigzag that we have. We can have it as an ABC or a W, X, and Y, depending on the internals. Okay, so with a WXY, we say it is 3 waves, 1, 2, 3 for W, then 1, 2, 3 for X, and then 1, 2, 3 for Y. Okay. This is a complex correction. Okay, we call this a complex correction. This is a simple correction. This is a complex correction. The difference being that this is just a simple zigzag 5-3-5. But with the complex correction, the W can be any of the corrective patterns. The X can be any of the corrective patterns, and the Y can be any of the simple corrective patterns. So that means W can be a zigzag, it can be a flat, it can be an expanding flat, a running flat, it can be a triangle, it can be a leading diagonal, but always your X wave and your B wave should always have 3 waves. We can't have an X or a B with 5 waves. Okay, so the important thing to note here, how we can use this to trade, is that we know we have an impulse, then this correction. After this correction completes, we should expect another impulse. So this would be a very good position to position yourself for a trade to the upside or to trade with the trend. The same with the WXY. If we have an impulse and then this correction, we are supposed to expect another impulse here. So we can really use this to time our trades and to make better trades. Okay, that being said, there is also some important Fibonacci levels that I should share with you guys. So if we are looking at a zigzag, there is really no guideline as to how long wave A should be. But after we've had our wave A, we know that typically wave B will terminate at 50 to 61.8% of wave A. That's wave B. The same with your wave X. It also retraces typically 50 to 61.8% of wave W, right? So you've been watching this pair back to back. Like I have with me open here the chart for USD Canada. I've been tracking it for a very long time now. And from here to this high here, it has made one big impulse. And we have a correction here that appears to be a zigzag. We are going to get into that. Okay. But first of all, we should know that typically we expect our wave B to retrace between 50 and 61.8% of A. Then wave C, so most of the times what I do when I'm taking a pair back to back and I'm clearly in this corrective trend, right? Some of the times you find that even this range here is a very huge range, is quite a number of pips, and you can trade it, or you might want to trade it also to the downside before you finally jump into the trade to the upside. Like I did, I took a trade at these levels and traded it down all the way down into the blue box, where now I'm ready for a reversal and I've just entered in this trade here. Okay. So another important Fibonacci level that we are going to look at is the forecast for your wave C or your wave Y. How far down will wave Y go? So wave C or wave Y should typically fall between 100% of A to 138 or 138.2. That's 138.2% extension of wave A. But in any case, okay, this is a rule for the zigzag, it should not retrace more than 1.618%. It should not retrace more than 1.618% of A. So this is a very important point, because if you are positioning yourself, you can forecast or you can anticipate where your wave C is going to terminate. And then you also know that if it invalidates the 1.618%, then it's no longer a zigzag that you're looking at, but you're looking at something else. Okay, so the same applies with your wave Y. It's also 100 to 138.2% of the initial move W. Okay, so now let's see how we can make use of this and then I'll also share a bit on an entry strategy that you can use when you're trading the zigzag. Okay, so let's look at this zigzag I'm looking at here on the US dollar, Canadian dollar. There's a nice zigzag that I'm looking at. It's almost complete, and we can start to position ourselves for further upside move. Okay, so looking at this wave here, let me just zoom into that. Okay. So now we can see that from this peak here, from this peak, we had this move to the downside. Then we had this move to the upside. Now we are currently in this move to the downside, making a clear or textbook three-wave structure, which is the zigzag. This is one example of the zigzag. Okay, so now do we label this A, B, C? Do we label this W, X, Y? We need to look at the internals now. Okay, if you check here, this appears to be made up of three waves. Let me use a different color. Let's use red or green. Let's go with green. Okay, if you check here, we have that move. We have 1, 2, and 3 waves. So the first wave is at 3 waves. So remember with your ABC, the ABC corrective structure is a 5, 3, 5. And then the WXY is a 3, 3, 3 corrective structure. Okay, so an ABC can also be a 3, 3, 5. This would qualify as an ABC pattern as well. So at this point, we are not sure whether it's an ABC or a WXY. So when we are doing our labeling or when we're counting our waves, we can label this as an A or a W. Okay, then our X or B wave, this should be 3 waves, 1, 2, 3 waves. So again, this can be wave B. This can be a wave B, or it can be a wave X. Let's look at the Fibonacci levels. Let's have a look at the Fibonacci levels. Okay, we want to see how much of this does okay, so from the start of wave A right to the end of wave A, we see that our wave B is completing in this zone here between 50% and 61.8% pinpoint accuracy. Okay, this is exactly where our wave B is reversing between the 50% and the 61.8% of wave A. Okay, and then the next step would be to focus where this whole correction is likely to end. Okay, so we have our wave A, we have our wave B, or we have W and X, and then currently wave C or wave Y is currently in play. But how far down is our wave C going to go? We take our Fibonacci extension 2. Okay, click on the start of wave A. or W, click on the start of wave B, and then the end of wave B or wave X. We say that in a zigzag, typically we expect it to complete between 100% and 138 or 1.382 Fibonacci level. So that would be between the 1 to 138%, like that. Okay, let me just quickly take that off. So anyway, anywhere in this zone, we can expect our final wave for this correction to terminate. Okay, now how do you trade this? How do you make use of this? Remember, there's also that guideline which says that your wave C or wave Y in a zigzag should not go down below 1.618%. So we don't expect our wave to come and invalidate this level. Otherwise, it's not just a zigzag. It could be maybe a 1, 2, 3, 4, 5, an impulse to the downside. Okay. So if you want to be very aggressive with this move, we know that it should reverse anywhere in this zone, which we normally call the blue box area. You can call it whatever you want. Okay, it should typically reverse within this blue box area, but it should not invalidate the 1.618%. So if you are an aggressive trader, you can place your buy order right at the 100%. Then you will need to have your stop loss at the 1.618%, right? Just take that out for now. So this is where you would typically put your buy limit. This is where you put your buy limit, but your stop loss should exactly be at the 1.618%. This would be your stop loss. Okay, as you can see, I'm already running this trade. I had my buy limit here. It was activated, and my stop loss is what's happening with this stop loss? Let me just quickly redo the Fibonacci there. Fib extension 2. Okay, so my buy limit was here at the 100%. And my stop loss, as you can see, it's exactly on the 1.618%. So I'm already running this trade. We're gonna see if it's going to play out. Okay, and then if you are not a very aggressive trader, you can also still benefit from this trade. Okay, we know that this wave should typically end within this blue box. In any case, it should not extend beyond the 1.618% area. So what you do now, as soon as the price falls into the blue box area, you want now to start watching the price action. Okay, now we're gonna watch the price action within this blue box here. And what you are simply looking for, reversal patterns. We are simply looking for reversal patterns or reversal signs, whatever you call it. right? And then as soon as you see that reversal pattern, you can enter with any other strategy that you use, or you can wait for the price to get into the blue box. Then when it goes out of the blue box in an impulsive move, you wait for it to correct, give you a correction. As soon as it breaks out of that range, then you want to enter here. You just place a buy at market price, and then your stop loss should be at least a few pips below this lowest point on that correction there. Okay, this is a more conservative way to trade that, but the only disadvantage is that you won't get as much pips as someone who bought from the blue box area. Okay, all right, that's all I had, guys, on the zigzag pattern and how to trade the zigzag pattern. I hope you guys are going to benefit. Trade responsibly. Cheers and bye-bye.